Welcome to our continuing series of virtual voices hosted by World Information Transfer and focusing on the United Nations Sustainable Development Goals. Today, we have Mr. Warren Raiti, who is a distinguished capital markets attorney and litigator with experience representing top private equity firms in various transactions, including IPOs and SPACs. He began his legal career at the U.S. Securities and Exchange Commission Enforcement Division in Washington, D.C., and has advised both domestic and international clients on securities, commercial litigation, and global regulatory compliance. His expertise extends to the intersection of global regulatory compliance and FinTech. He holds a Juris Doctor from Drexel University and an undergraduate degree from Fordham University. Beyond law, he is also a talented pianist and a classical music composer. Over to you, Mr. Raiti.
Thank you so much, Dr. Durbeck. It's a pleasure to be here and to join you all for the discussion today. And really, thank you so much for the time to discuss something that is very exciting to me and has been very exciting to me since I started my career in law, and now as that's merged into banking and global banking. But I wanted to sort of kick off by just sort of highlighting some interesting facts, and then sort of letting you guys know how we're dealing with them. In my practice today, most of the time that I spend is helping people develop banks and hedge funds and financial institutions. But I had a very interesting and unique experience that happened about 5 years ago that really led me to where I am today. At the time, I was an attorney practicing with a law firm in Midtown, and a client came to us and they asked us if we would help them start a bank from scratch. And what I wasn't cognizant of at the time, but what I would become ever more focused and now relatively passionate about, such that it's become my life's work, is the fact that there are roughly 2 billion people in the world that transact about close to $2 trillion a year through what are called dark channels or off-market channels that are subject to a lot of different types of criminal issues, and are not and are also very expensive. And the reason that this is the case is that because most of the world's population actually is excluded from the primary financial systems that we know and appreciate today. And that really relates to effectively their ability to access and transact in cross-border payments in US dollars and other currencies. So, but backing up a little bit, as Dr. Durbeck mentioned, my background is in corporate and securities law, and that's really how I got my start. But when we were approached by this client to start a bank in an international market, I had absolutely no idea about anything involving banking, the nature or extent of services to people around the world, and how all that was sort of formulated and how it was managed. My experience with the banking world was rather a boring one, which is, I think, probably the experience of most of you on the call, where you see the bank as something where you go in and there's someone behind a teller and you have a transaction and you don't see very much of what happens. And it seems to work, or you get some money and that's it, you leave. There's no other real point of interest or reason to be interested in what's going on. And that's at least from a US perspective. Everything is very cut and paste, very carbon copy. And I never had a real reason to delve into it. And then this client asked us to put one together from scratch. And we had some experience putting together FinTech companies before from the technical side, and from the operations side and the legal side also. So we said, sure, but we'll give it a try. And what ended up developing from that was effectively a global tour of emerging markets and a very, very deep-seated understanding and concern around access to meaningful banking and financial services for millions upon millions of people around the world that are financially excluded from those services by no reason other than socioeconomic background and in a lot of cases geography. So there are a lot of reasons that go into this, but fundamentally, when we started putting this first bank together, again, we'd never done it before. The first thing that sort of happened was we got the bank up and running in terms of the structure, and we got our systems together, and all of our compliance materials, which I'll talk about later, are very important. And we got something called SWIFT. I don't know if anyone's familiar with SWIFT, but we bought the SWIFT structure and we plugged that in, and we said, okay, we now have our ability to transact. We have a SWIFT code so that we can send and receive international payments. And we said, let's go. And it became very apparent very fast that it wasn't going to work. And why wasn't it going to work? The reason it wasn't going to work is that any payment that occurs, and this is ultimately the reason that people end up becoming excluded throughout large swaths of the world, but any payment typically that has occurred on a cross-border payment channel for the last however many years, really since its inception, is effectuated by virtue of a series of daisy-chained relationships where my bank in the US will have a relationship with another bank, maybe in Europe, and then the beneficiary's bank maybe is somewhere in maybe Eastern Europe or Southeast Asia or somewhere else in Northern Europe or South America. But this daisy chain linkage of all of these different banks is the only thing that allows these payments to actually make their way across the world, because it's all based on a system of trust. So I only trust banks that I know, and by virtue of that, only banks that know each other can transact with each other. By virtue of that, only people that work with banks that trust each other can transact with each other. And that is effectively the structure for the entire world of banking, highly simplified, but all cross-border payments for the most part are subject to this limitation of these linkages. The question then becomes, well, so what happened next? So we realized that this is the case, and the relationship of these different banks, and as they link together, that's called correspondent banking. So every relationship is called a correspondent. So if I want to send money to a friend of mine in Sweden, I may send it from JP Morgan in New York. JP Morgan may have a correspondent relationship with that bank in Sweden, or with a different bank, which then will have another relationship with the bank in Sweden that I want to send to. Each of those are called correspondent relationships. So correspondent banking is the nature by which all of these payments are made. So it was then incumbent upon us to obtain a correspondent banking relationship by virtue of the fact that if you want to make payments to people in various parts of the world, you have to have this sort of structure of trust. You have to also get a correspondent that has a lot of other points of trust, right? Because if they only have a limited point of trust, you can only maybe send to one country or to two countries. So you need a correspondent bank that has lots of different points of trust. So I ended up traveling the world, really. It went from the US to the UK, to Cyprus, to Sri Lanka, to Cambodia, to South Korea, and stopping off and really in search of this correspondent bank. And the specific question we had was, from whom can we actually obtain US dollar correspondent services? And we went to all these different banks saying, can you help us? Can you help us? Can you help us? And the answer that we consistently got was, No, because our correspondent banking in US dollars, our US dollar relationships were turned off. And this continued to be a narrative throughout the development of this bank. And I'll tell you today sort of forms the challenge that we have in front of us, which is that many banks around the world that service local clientele who would tremendously benefit from the ability to sell products, to sell services, whether online or in the markets, do not have affordable access to US dollar payments, because these little banks in this daisy chain all around the world are deemed too risky by US banks to service them. And so those pipes have just been over and over again turned off, and it becomes harder and harder to get those payments through. They become expensive, they become subject to a lot of either paperwork or regulatory friction and restrictions. And for that reason, banks are unwilling to service people that otherwise should have access to these types of payments. So what results in that is all of the payments that would ordinarily traverse a known or regulated banking environment are pushed outside of that realm, and they're pushed into these gray markets or dark markets where it could be crypto, where people rely on cryptocurrency for payments, which don't have any regulatory, real cross-border regulatory structure associated with them, at least in the pure crypto form. They could be through local networks, other call them non-primary payment remittance services, which don't really provide a lot of information about who's making payments, and a lot of things can be hidden. They're also very expensive. So there's a tremendous need, specifically $1.3 trillion annually, for a cost-effective remittance service that also is able to enforce or incorporate all of the regulatory necessities that US banks require as an aspect of US law to provide these services. So to sum that up, the problem is you have huge swaths of the globe, over 2 billion plus people, who don't have access to a bank account because they're either in geographies or are themselves effectively not wealthy enough or are too poor to make it worthwhile for their banks to do the work that is necessary to get the US dollar payments. These people are completely either underserved or not served at all. So what we're working on now as part of a new bank that I'm a co-founder of with some colleagues is a bank called Abacus. And the principle of Abacus is to completely remove that daisy chain structure, or remove as much of it as possible. This is something that was, I think, attempted by the crypto revolution, but it does it without the regulatory purview, and for that reason is meeting a lot of friction, obviously, from a legal standpoint. But what we've done is removed the daisy chain requirement by making it very easy for people around the world, regardless of their level of wealth or their level of access to resources, to open a banking account, to make it possible for them to open an account online using their phone through a simple biometric login process, and through something that we've developed as sort of a self-sovereign ID, using different types of technical data to identify and limit the risk of money laundering and illegal activity around that person, using technical restrictions, but at the same time permitting them a bank account. And you can think of this new platform or service effectively as going from what historically has been if you think of like the telecommunication services, when you used to have to make a long distance phone call and you'd have to connect to many different providers and you get charged fees every time, versus WhatsApp today. So what we've essentially built is a singular platform like a WhatsApp, where payments as well as other data can be transferred at extremely low cost, effectively just the cost of computing that transfer on the system. And we're partnering with Visa in order to provide a virtual card as well as a physical card so that people in emerging markets and around the world can effectively tap to pay. So cross-border US dollar transactions will be free, really in any currency will be free. The account that the person utilizes will also be free and all online. And this will be the first bank that has been able to accomplish this to our knowledge. There are other services that sort of come close, like a TransferWise, but they're not quite the same thing, and they can still be expensive. This will be entirely free. The way that we anticipate paying for it actually is through the use of data, which is the other sort of forefront in our view of the next generation of what banking will entail, which is how can you leverage data for the benefit of reducing costs and reducing regulatory risk amongst your customers. So what we're able to do effectively is to allow the user to become the owner of the data on their account and then to monetize that with the option to cover the cost of their transactions, making them effectively free. Practically speaking, when you convert from the more traditional banking structure to something like a P2P system, like a WhatsApp or the equivalent of Abacus, which is what we have, you can tremendously open the level of access to individuals and companies around the world. We're starting with individuals, but open that access to banking services that they just otherwise wouldn't have. And ultimately, I think I've learned also through the process of actually starting one of these banks from scratch is how strong the US banking system, how powerful it is, also in terms of exercising global policy, how swiftly it's able to change direction. For example, I was meeting with a bank in Cambodia and was asking them how they, at the time, were obtaining their US correspondent banking services. And they said, well, we have Bank of America, or we had Bank of America. We had an account with Bank of America, and they would transact for us up until about 2 weeks ago. And they called and they said, we're turning off your services. You have 2 weeks to get rid of all of your US dollar liabilities and clientele. And it seems crazy that something that is relied on by people for, whether it's their personal lives or their business needs could just vanish so quickly. But that is in fact the way that it works. And banks in emerging markets and in just generally in markets around the world that rely on these correspondent services are always at risk of having those services turned off. And one of the things that increases that risk is, frankly, serving customers in jurisdictions that are emerging market jurisdictions because they're deemed higher risk. So in order to solve all of this, the banking world has really struggled because in order to solve the perceived risk or the actual risk, it requires more data, greater use of access to data, having nimble data, and being able to really understand more about the customer and about the transaction that's taking place. So ingesting all of that information, consolidating it, analyzing it, and being able to come out with a conclusion that either a customer or a transaction is low risk is, from a technical perspective, something that requires an integration of systems that also has not to date been really possible because of the way banking systems are built. So a banking system is often built around a core. That core really deals with just numbers, so debits and credits. Pieces of information like a person's citizenship, their date of birth, their, even in some cases, their supporting documentation for their account are all kept in modules or in portions of the system that are not directly integrated with the core. So it becomes very expensive for banks to transform and upgrade their technology to serve these quote unquote higher risk communities. And as a result, they don't undertake those costs and they simply just don't serve them, or they turn off access to the services if they get regulatory pressure. Transforming that cost structure is what we're doing with Abacus by bringing everything onto a single platform, integrating all of the individual information with our core bank so that we can analyze risk in a very deep way and also limit risk in a very deep way without the cost that's typically associated with it. So we can do, for sense, what a traditional bank would take, several full-time people to actually manage on an ongoing basis. And that's sort of the power of a next generation banking system. But again, they're expensive to build. Ours has taken about 10 years altogether in terms of its development, over $100 million in terms of the total cost that has been put into it. And we think we're about 10 years ahead of the market in this regard. But the point being, there are a lot of people around the world that need this service that haven't been able to get access to it. And we think we can provide that now. So let me pause there. I hope that was not too much of a disconnect and I haven't really lost anybody. Dr. Durbach, is that a good place to pause, or is it okay if I, sort of get more into?
Actually, it's up to you. I just wanted to thank you for the introduction to the challenges of starting a bank and the financial services and establishing a corresponding relationship worldwide. I think that's a wonderful approach. And also the problems for the small local banks that cannot be served by American banks due to security concerns, which I can certainly understand, but mostly the possible solutions established by your research and your organization in resolving this worldwide problem. So why don't we go to Susie, who is going to ask the questions, and then you can interject whatever you think that will further make a better understanding to our audience.
Good.
Over to you, Susie.
Thank you, Maureen. We received a lot of questions so far. So first is, what are the main challenges of making financial services accessible to all individuals around the world?
Great question. Cost. The cost. There is a high regulatory burden on, so it's two things. It's cost, and there needs to be some development of regulation. On the cost side, it is possible to make these services available to people around the world if banks are willing to spend on the technology necessary to better understand the customer and to be able to put limits and restrictions around the customer, such that the customer's activity is consistent with that customer's risk profile. Banks are typically not able to do that because of the way that their systems are built. They just don't have the ability to fine-tune limitations on customer behavior. It's very difficult and very expensive. So making that cost investment is something that is the biggest hurdle. So yeah, that's the reason why the people around the world are also not served, is because the cost of serving them, if they were to do it without technological improvements, would require a lot of personnel and is just too expensive for the benefit that they get from that group.
Thank you. And that ties into the next question regarding the risks involved. Like, as we've talked about, like accessing data overseas, potential fraud, et cetera. Are there other risks and ways to mitigate?
So the biggest risk that drives the cost that drives the exclusion of banks and communities around the world is actually, from a U.S. perspective, it's U.S. Sanctions, Bank Secrecy Act, and AML, anti-money laundering laws, and also Foreign Corrupt Practices Act. These are all important pieces, but these are really important and critical laws in the U.S. Put in place after September 11th to try and prevent the exploitation of the financial system from terrorism and illegal activity. And they require banks to have a lot of information about the people that they do business with and the types of transactions that they engage in. And that complexity is something that really is what's driving the cost, because getting that information, understanding it, analyzing it, and then limiting the bank's activity to those things that are safe within its bounds is where the cost is being generated. But it's really the risk is really around what's called OFAC, the Office of Foreign Asset Control in the U.S., and Treasury Department sanctions and regulations.
And weighing these, challenges and risks, but it seems like the benefits could outweigh those. So what are some of the advantages of online financial transactions compared to cash operations for financial global inclusion?
Yeah, so apart from sort of the more straightforward distinction, right, between cash being a very sort of limited structure, which requires it to be physically moved and dealt with, it is, I guess, the core of my message today that I really wanted to get across is financial inclusion is possible with the technological tools that we have now at our disposal every day. It is the ability of banks and the ability of technology firms to come together to actually apply that technology to the regulatory standards that exist to solve the problem. We absolutely have the tools. Abacus, I think, is the first example, to my knowledge, of a technology firm actually implementing it with the regulation. But these tools exist today. They're not something in the future. And the benefit to transacting online is that we can both meet all of the regulatory requirements, provide greater security around the regulatory requirements, and also greater benefit to people around the world who can receive much lower cost transactions, and frankly are at lower risk of having to engage in other types of or support other types of payment channels that are potentially nefarious. So if instead of sending money through a private channel where it could be a series of even individuals or groups or communities that pass money along, which is still a very prevalent way of sending money in a lot of the emerging markets, you could, or a great example, instead of sending it by crypto, right, which can get all mixed up in nefarious activities or be used by nefarious parties, you can send it instantly for free and within a regulated, quote unquote, lit or illuminated environment, which promotes U.S. interests and global interests in including more transactions, right? So from a governmental perspective, governments want to have visual access to more information, right? They want to see what's going on so that they can best protect themselves and develop their own communities. Encouraging participation in those regulated markets is to the benefit of everyone, governments, individuals alike.
And a lot of these digital solutions include automation, but do you think that they also create job opportunities for local people in developing countries, like with the increased AML compliance or other areas where they would need more people to help?
So I would say that they create job opportunities generally to the extent that any technology development is going to create more job opportunities. I think the real impact of it is permitting economies, local economies and communities to actually engage in global business that they're now restricted from because of either cost of cross-border transactions or just inability to participate in them. So a manufacturer of say a very high quality lace product or fabric product in Sri Lanka or Cambodia may have high cost of transferring, or may be forced to transfer through some channel where they don't have a lot of security around their products, could effectuate payments for free directly, growing their business locally. So I think it's a much broader potential development around the economic benefits that would exist by virtue of no cost transactions.
Could you provide some best practices that individuals who are joining this call or just in general can do to improve their financial literacy for themselves and some people in their neighborhoods or areas?
Yeah, so this is an interesting question, and it's something that it really struck me as I was going through this process, because one thing that is almost never taught in US school systems, and I'm not sure about the rest of the world, but definitely not in the US, is financial literacy, right? Understanding how money works, understanding how the markets work. You know, the way that I began to learn more about this was largely by looking at examples when I was in law school. I didn't really click into this interest until I was in law school, but I would say the best way to sort of begin to learn, it really depends on what your goal is, right? If your goal is to enter the market as someone that specializes or works in this space, I would definitely point people to what's called an ACAMS certification. It's not a very expensive certification, but it is generally considered to be the leading standard for anti-money laundering and compliance knowledge in the market. There are online courses and exams that you can take. That's also an enormously powerful way to open up your either resume or business or just job prospects, either in the US or globally, because everyone recognizes that certification. There's always a need for more compliance staff for all the reasons that I just mentioned. The world is not, not going to need any less scrutiny of the financial markets anytime soon. So it's always a growing field, and it's called the ACAMS. It's the Association of Compliance Associated Members. I got to look up the exact terminology for the lettering, but ACAMS. I'll pull it up now. Actually, I can drop it in the chat. But this is a very powerful learning tool for international money laundering and financial crime training. By learning this area of the market, I think I can maybe drop it in the notes. I'm not sure. We can circulate it maybe after the call. But by learning this area of the market, you will have an introduction not only to the legal side of things, but to the operational side of things. And the thing that's been most valuable, actually, in my experience and what has permitted me actually to grow and develop in my education and learning in the space, is having had experience not just with the legal background or the regulatory background, but with the operational side of things, with the technological side of things. So my greatest recommendation would be to read as much as you can about, like if you can go on and find FinTech companies that publish APIs, right? Their sort of software handbook, go through and just read through it, get familiar with the language, get familiar with the vocabulary. The stuff is actually not that complicated. It seems complicated. It's not. I mean, it really reduces down to a lot of fundamentals that you can get access to by reading a lot of those FinTech docs, and I'm happy to coordinate with Susie and Dr. Durbach to maybe provide samples of some of these that everyone can utilize. So ACAMs, start reading through FinTech APIs. If you can get your hands on them, you'll learn the vocabulary, you'll learn the structure of the technology. The ACAMs will also give you an understanding of bank operations, which is extremely important to understand the flow of information and the flow of controls. And, with those three things, you're going to have a much deeper understanding of banking and financial services markets than probably most people you'll talk to, because you'll know exactly how the pipes run. And that was the thing that originally inspired me to begin learning about this when I was in law school. Someone gave a talk on market structure and exactly how do these things work. He was talking about the New York Stock Exchange and how trades work, right? How does it trade and then clear, and what are the rules surrounding it, from people on the floor to everything else. So market structure is an absolutely fascinating area, and I'm happy to provide some materials also to kind of kickstart an interest in that, because it's a really fascinating space, and it's global. I mean, it's brought me all over the world in terms of my education on it, and it's well worth spending the time on.
Thank you. Really appreciate it. What advice would you give your younger self at the beginning of your career, or someone on the line who's interested in pursuing a career in law or financial services?
Definitely go to law school. It's an extremely valuable tool to have. Do not, however, necessarily feel that you need to limit your the application of that degree to working in a law firm. There is the legal sort of industry is structured in such a way that it's very it's very, very structured, right? And what ends up happening is you can become a master of a very, very limited set of information, or a limited set of activities, whether it's a corporate transaction or something else. And what I would say is try and find ways of, how do I put it, not letting other people, whether they be partners or law firms or law schools, direct your path. I mean, when I was at Drexel, the dean at the time, I was interning for this gentleman that I told you about that encouraged me to be interested in market structure. And I worked for free for 2 years. I interned for free and I worked my butt off for 2 years because I was fascinated with the subject. And the dean of the law school told me that I shouldn't be doing that unless I was getting paid. And they really tried to disincentivize me from working for this gentleman. And I said, no, mind your own business. I'm going to pursue my own path of what I want to do. And that's the same advice that I would give. If there's something that you find interesting or that strikes a passion in you, if you're a student and you have the time, spend the time to pursue it. Time is so valuable. And if you can begin focusing now on an area of expertise, and really understand what that is and get into it and become a master of that space, do it. Like, spend the time to learn about technology, spend the time to get familiar with the vocabulary. It will be so valuable. But don't let law firms or law schools necessarily direct you down the path of have to be an associate, have to work for 8 years to become a junior partner, because it can limit you. It can also be a wonderful training. And if you really want to be a lawyer working in a law firm, you can do that. I have a law firm, a small law office here in New York, but it shouldn't limit your understanding of what the application of that skill set is.
That makes sense. And any other qualitative or quantitative skills that you believe are essential for success in this field?
Focus, I think, is probably the biggest one, and I think that's probably the hardest to effectuate. I notice as time passes, I don't know if that's true for everyone else, but I think the way technology has developed focus on a particular subject, on a particular subject area, and really take the time to dig into it, to read about it. If you get an internship opportunity, to throw your whole self into it and explore it, because you will develop an understanding of law, an understanding of operations, an understanding of whatever it is that you're applying yourself to that can then solve problems. And at the end of the day, people tend not to ask me so much like, where did you go to school? No one seems to care. The question is, can you solve this problem for me? And how soon can you solve it, and what will it cost? And if you can solve problems, or more importantly, if you know where to go to get the information to learn how to solve the problem, you'll be quite well off. So that would be my other recommendation, is just focus on an area where you can really specialize and become an expert in that thing, become a subject matter expert, and help people solve problems.
What key moments in your career have significantly shaped who you are? Maybe like a situation or client that affected you the most?
It's a very apropos question. When my first year out of law school, I was working at a family office, and I had started building up my clientele, and one of my clientele that was my largest client at the time was a very new client of mine. And I guess just about a year after having that client, they had a major criminal action brought against them for things that happened years prior. And it completely derailed the entire firm. It completely derailed the first year of my career. It made it very difficult for me to sort of, restart, because this business that I had really worked with all of a sudden just became defunct. But I had the opportunity to sort of help engage in the defense and to apply my securities knowledge and background to aiding in that, which we did successfully. But I would say, I would say that is something that would have really thrown someone off. And my advice on that would be, when something really seemingly catastrophic happens from a business perspective, or from the perspective of your personal development, if there's some problem, dig into it and lean into it. And it's like the phrase, the obstacle is the way. But by that happening, I ended up sort of developing out and starting a technology company, meeting two people with whom I started a FinTech company, where we built in the laws that I really knew well at the time, which were the Securities Exchange Act laws governing trading, securities trading, stocks, and things like that. And we built that into a financial technology company and sold it a couple of years later. So don't be afraid, lean into risk, have confidence in yourself. I mean, when, this event where, my biggest client effectively was rendered ineffectual, right, by virtue of this case. And the biggest thing that I learned from that was just persistence, lean into the difficulty, figure it out for yourself, always do the right thing. And you can turn these sort of adverse circumstances into benefits, actually. But that would be, very quickly. The other one was I worked also for a time for a doctor who's developing a genetic test for prognostic genetic test for breast cancer. And I wasn't paid for some period of time, and I kept working, and I wasn't getting paid. And so my other point would be, at some point, if you are working too much, you're not getting paid what you're owed or what you're due, just stop and do something new. That was another thing that led me into developing the FinTech company. So have confidence in yourself, and don't be afraid to ask to be paid for that are valuable. And you can always invest your time. I've done a lot of investing of my own time in relationships and in projects. And you have to do that also, but definitely have the confidence to know when you should be getting paid for something, when you yourself are investing, and what the terms of those things are, because people will run over you if you don't.
Thank you. A lot of audience members are interested in your passion for music and the arts and how you're also a pianist. So could you just speak to kind of how you were interested in this, and how do you apply your creative side to your work?
Yeah, so the creative side of things has been relatively, in my mind, it's a core of who I am. I've been playing piano since I was maybe 5 years old, 4 or 5 years old, and writing music since I was maybe about 8 or 9. And it's been a aspect of my life that has provided for a tremendous amount of personal reflection through music. And that reflection, I found as time has passed, actually is a mechanism of thinking. And so in playing music, whether it's something written by someone else or if I'm writing it myself, it's a mechanism of identifying and releasing challenges and tensions that exist within my own mind and with my own person, and concretizing them and actually working through them through music, which has been incredibly helpful. And I think the creative aspect that comes with that has been both helpful, but you have to be careful also. It's helpful in the sense that it does permit a little bit more perhaps expansiveness and how you see and solve problems. But if you're too creative, you kind of lose sight of the structure. And so music is great in that way too, right? It's creativity, but within structure. And so you have rules and you get to vary within those rules. And law is actually very similar to that, where you have a statutory structure and you can have different interpretations and variations within that structure, but the lines guide you at the end of the day. But yeah, I'd say from a meditative and reflective perspective, especially from a stress management standpoint, it's incredibly helpful. So if you have the opportunity to grab an instrument and play, or you already do, I definitely recommend it. It's been very beneficial to me.
Thank you. And how do you maintain a balance between, like the requirements of clients from like a technology and innovation and capital perspective, but then also the ethics and standards of kind of from like a legal perspective? Like, how do you find that middle ground of being innovative, but also kind of walking between those lines?
It's hard. And it's kind of where like the fun lies also. But it's challenging because clients, depending on the personality of the client, and I definitely have some like this, they want to move everything forward all the time, and they just want to see the results, and they don't particularly care how they get there. They just want it to be the result. And then it's your job to make sure that the way that you get there is comporting with applicable law, and also just spoken and unspoken ethics, right? This concept of like, do the right thing, treat people well. There are, laws, regulations, business practices, and then sort of like that quiet ethic that exists in how you work and deal with people. I found that applying that, even in the face of, clients sort of shouting and wanting, certain outcomes, is challenging. But more often than not, I found if you really look at the laws, you look at the things to be done, and you look at the goal of the client, or the thing that they actually want to be accomplishing, most often there's actually not a dissonance between these two things, and it's just a matter of either languaging or providing greater clarity and process around the way things have to be done in order to get there. And there's usually not a conflict, actually. A lot of these conflicts or perceived conflicts exist because of either failures in imperfect communication, imperfect understanding. But more often than not, I haven't found the goals of clients to be antithetical fundamentally to law or ethics. It's just a question of often backing up, going down to the base, understanding what the facts are about everything, and going from there. I mean, a lot of pressure and disagreements and issues arise from people not actually knowing what they're talking about, as opposed to actual conflicts.
Makes sense. And your response ties to the following question, which if there have been times when your views really didn't coincide with a customer due to ethical or moral principles, but it sounds like it's typically kind of just to take a step back and understand what's going on.
Yeah, I mean, that happens, right? That happens, and in those circumstances, you have to bear in mind what your moral and ethical principles are, and more importantly, what your moral and ethical principles are in the context of the relationship and the obligations and your role with the client, right? There are times when a client wants to take an action, you believe it's the wrong action, but your goal is not to take that action for the client. Your goal is to advise them. And in a lot of cases, you can give your best advice, but it's up to the client to make the decision. And making sure that that boundary is sort of maintained between advising and doing, right? And in my world in particular, it gets tricky because I do a lot of doing also, not just advising. And so maintaining that bound is challenging, but like I said, I haven't so much had the experience where there really has been such a major conflict that can't be resolved. And if it is an irresolvable conflict, they've pretty much always arisen in the context where my fiduciary obligations as an attorney don't give me the option to really disagree. We provide the best advice and the client makes their own decisions, however foolish they may be.
What are your thoughts on kind of like the cryptocurrency trend? Like, do you foresee a world where, we move towards these types of currencies, or do you think we'll have a combination of like cash, cashless, and crypto options?
I think crypto exists for the exact reason that banks were not fast enough to do all the things that we were talking about earlier. I really believe that it's a solution looking for a problem. There's no reason that, the big benefits that people have used crypto for are largely speed of transactions and cost efficiency of transactions, right? But those things can be solved by banks today. They just haven't spent the money to do it. I think they probably will start doing that now. There's no reason that a banking transaction can't be as fast as chatting on WhatsApp, right? It's just data. And going forward, it's going to be more about data than it is about anything else. I think ultimately, because of the way the distributed ledger systems work, they're going to be much slower than P2P transactions. I think there are inherent issues with regulation that would even slow those transactions further because of the degree of information that has to be appended to a given transaction. Then you multiply that by hundreds of millions of people potentially running transactions. I think there will be a greater centralization of transactions in the future and of payment activity. I think it will shift almost entirely to online formats, but I don't know that it's necessarily going to be crypto per se in the way that we understand it. Will they be encrypted? Like, absolutely, but will they be on a distributed ledger with everybody having to sync their ledgers to update? And no, I don't think it'll be very efficient to do it that way.
Makes sense. And do you think it's possible to kind of reduce the amount of like paperwork and processes that currently we have in the banking system, while also maintaining the level of ethics and scrutiny around like any fraudulent activities or anything like that?
For sure. That's being done already. So one of the tools that's pretty well accepted now generally is biometric onboarding, where instead of submitting certified documents, you scan your face and you scan your passport and you're done. Well, largely, you likely still have to upload a proof of address. I think it is going to be made more efficient for every jurisdiction and every environment that is able to consolidate and sort of validate data around who somebody is, right? But who somebody is now we can garner that information from a lot of different places, right? Like Instagram is probably a better definition of who somebody is and what they're doing than a submission of where they live, right? For a lot of people. So using social media, using different data points that are non-traditional, I think is going to be something that is more and more accepted just because it's more potentially practically reliable and it's a better data source than what's been used historically. So yes, I think paperwork will continue to reduce and the online methodologies will continue to get more efficient.
And in our last 2 minutes, is there anything final that you would like to leave our audience members with as we wrap up the presentation?
Yeah, I think I would just leave with this point. We all, I think, here, regardless of where we are in terms of age or being students or in the market, we all have sort of our different passions and areas of specialization that we can partake in. I think the thing that I would leave with is this problem that I've identified today in terms of financially excluded people and communities around the world. It is an eminently solvable problem. It is something that technology will solve. It's something where there's tremendous opportunity for everybody on the call to participate in. And it's something that I think can really do, it's a technology that can fundamentally transform the lives of hundreds of millions of people around the world, and it's worth focusing on. The other thing that I would leave everyone with is, even though it can be very challenging, I would say do your best to maintain your passion and your focus as an area of your work life or how you make money and survive, and don't let other people sort of pull you into their own worlds necessarily. So like if you're a lawyer and you want to do finance and securities, but you work at a law firm and all they do is medical malpractice or slip and fall, right? Don't let yourself fall into that just because it's an available job, because at the end of the day, I think the personal passion for what you do is going to be what drives a real feeling of success and or just success, but just happiness and contentment in how you're applying your time. Yeah, those would be my comments.
Thank you very much. Back to you, Dr. Durbach.
Well, thank you, Susie, very much for moderating, and thank you very much for not only a very informative presentation, but also to offering our students the opportunity to answer some of their concerns and questions. Particularly, I like your philosophy of sticking to your own goals and focusing on one's passion. This is so very important, since I usually work with people that have not done that, but were pushed by others, and they are very unhappy. And then my job is to help them reorient themselves to do what they want. But I also have a question for you. What is your opinion and of what is going to be happening with AI? To what extent can that be helpful, not only in whatever you're doing, but basically on the general informative process that is going to be multiplied millions of times by using artificial intelligence?
Yeah, so I have a friend of mine who's a senior developer at Meta, actually, and I asked him about this because it's a very new area. His view is the people that really, truly understand AI, he thinks he kind of gets it, but there's probably 100 people in the world that really understand the full impact of exactly how all of this is working, how it's structured.
I agree.
Yeah, and what it can do. My impression from talking to him and just understanding a bit about how it works is that it'll be tremendously, tremendously helpful. And it will reduce, it has the opportunity to reduce enormous amounts of risk to create incredible efficiencies. And I think it's going to have a very, very, very big role. How long it takes to get there in terms of the development of that technology and people really applying it, I don't know, but from what I understand from my friend, it's moving very fast. I mean, he's been able to write programs that sort of obviate whole teams, even within his own structure that he manages. And so for like closed loop problems, I think it'll be incredibly effective, and will be a big part of our lives in the financial services industry.
Thank you. I happen to agree with that, and I'm very glad that you have verified what I perceived, and I'm definitely not an expert on it. So thank you again very, very much for a wonderful presentation, and please take good care of yourself. Have a wonderful week and a very successful future. Goodbye.